one exam paper. This was the one that you wrote. What was your approach? I need to understand what you did in terms of approach when you are given an exam paper. So what is the first thing that you do when you get an exam paper?
Well, the first thing that I did was the easiest question, so I started with question 4.
Okay, so that's good. So you literally got the question paper. So this was the exam. They give you the question paper. You would go and look at the proposed timetable, and you said question 4 looked like the easiest, right?
Yes.
Is that right?
Yes, I did.
Okay, great.
I thought that's how I started with it, yeah.
Yeah, so you would start with question 4. That's good, because question 4 is for 10 marks, and it was multiple choice. It wasn't multiple choice, but it was short questions. Normally they give you multiple choice, but not in this exam.
Yes.
You had to calculate small things like goodwill. You had to calculate the payment to debtors, etc. Okay, so we've covered that question already. We've looked at that previously. We need to now look at the longer questions. And right now, it doesn't really matter where you start. You can either start with 1, you can look at 2 or 3. It all depends on you in terms of what you find, let's say, most manageable after having done something that hopefully was easy. If the short questions are difficult, then rather don't do them and rather do a question that you're most comfortable with. So question 2 is CC. That's disclosure. That should be relatively easy to do. Question 1 is also disclosure. So with disclosure questions, yes, they can get quite long, but they're normally quite specific because they focus on a specific area like this, partnerships, or like that, close corporations. So I'm going to start with question 1 because it's the longer question. You can start wherever you want to, but we need to focus on what they're giving us, which is the disclosure. So calculating the profit, calculating the statement of changes in equity, and the statement of financial position. So that's 37 marks. It's 44 minutes. So let's go to the question. Here's it, and let's look at the required. Okay, because remember, before we even do the question, we need the right answer in terms of template. So you need to go to your exam booklets, and you need to create yourself an answer sheet so you can answer this question. So how do I create that? Well, I look at the required. A says, calculate the total comprehensive income of MC Animal Clinic for the year ended. Right, so that's total comprehensive income, meaning it's profit and loss, which is your income minus your expenses. Those are the accounts that you're going to be looking at. See, that's revision. Right, that's theory that you would have covered in the textbook and the study guide. That's what we would have covered last semester when we did all the content, okay, the study guide and the examples. So that's something that you need to learn. That is study material. That's something that you have to actually study and remember, and then when you get to the exam, recreate that specific disclosure line item. So statement of profit and loss and other comprehensive income. We know we're going to start with sales, possibly. We know we'll have cost of sales. So depending on what system they've given you, periodic or perpetual, that's either going to give you a cost of sale calculation or the actual physical cost of sales amount. So that's something that we need to possibly show. Then we'll have gross profits. Then we're going to have a list of other income. We can give more detailed disclosure. More detailed disclosure is normally better. So if you can provide them with more details, then do that, because you can group certain expenses and incomes together. For example, your interest can be grouped as the finance costs. Your sales and administration can be grouped as one. So there are different ways of presenting the information. I like to show it all separate. It shouldn't matter. They should still allocate marks for those line items as long as you've got them in the right places. And then we've obviously got profit for the year. Are we going to have tax for a partnership question?
Yes.
No, not for a partnership question. Why not?
Oh, because they taxed individually.
Exactly. So if you're a partner in a business and it's A and B working together, A and B will pay their own separate taxes. They won't pay taxes together as a partnership. They'll pay them individually. See, again, that's theory. That's stuff that you need to cover, right? Learn and remember, and then you just need to apply it when you get to a question like this. Right, and that's it. There's my template. Okay, obviously leave more space so you can do workings and so on. Right, what else did they want? Well, let's go back to the question. They also wanted this. Statement of changes in equity. Okay, SOCI. And they said the column for the total can be omitted. So you don't need the total column. Notice how many marks this is for. It's the biggest out of all three of those sub-questions, A, B, and C. So obviously B carries the most marks, and you know you're going to have all these different columns for all the partners. So what does that look like? Well, you're going to have opening and closing balances, and you're going to have columns for all the different line items. Okay, let's do that on this side. I'm going to call it the statement of changes in equity. There's a heading, and then I'm going to have total, well, not totals, but column names, and then, well, no total, because they said the total column can be omitted. But I am going to have a balance at the beginning of the year. How do I know what the beginning of the year is? I look at the question. The question says 29 Feb 2016. That must be the end of the year. So what would the beginning of the year have been? If the end is 29 Feb 2016, beginning would have been?
1st of March.
1st of March 2015.
Yeah.
Okay, so 1 March 2015. Right, then you'll have balance at the end of the year. Again, leave space. And then 29 Feb 2016. And that's it. That's pretty much what your statement of changes in equity is going to look like. And obviously you'll have different columns for all the different equity line items. Okay, that will build as we go through the question. But I know I'm going to have a heading there and a heading here, and I'm going to have columns representing different things. What else do they want in the question? Well, let's have a look. Prepare the equity and liability section of the statement of financial position. Okay, notice they only want equity and liability. So don't waste your time in the exam trying to draw up the asset section as well. You're not going to get bonus marks for it, and then you're wasting time and you're not getting the marks that you're supposed to. Okay, so I looked at your workings that you sent through, and you did only do the equity and liability, so that's fine. There's nothing wrong with the approach. Okay, so equity and liabilities, let's draw a heading. I'm going to do this on the right here, just move it across, and I'm going to write down statement of financial position. Okay, statement of changes in equity, statement of financial position. Okay, then financial position, obviously you're going to have headings for equity, okay, and then skip some lines, and then a heading for liabilities. And you know liabilities will be separated into non-current and current. Then I'll have a total, and the total is going to be for everything, so the equity and the liabilities. Right, and this is what you need to spend at least 2, 3, 4 minutes drawing up, because it might seem like a waste of time, but it isn't. Okay, because if you've got the right template, then you'll know what to look for. Okay, so it's not a waste of time to draw this up and to take time drawing it up, because now if we revise, statement of financial position is looking at the accounting equation. Okay, A minus L. Right, you know you're looking at two sections here, the equity and the liabilities. Right, if I've got a statement of changes in equity, well then the statement of financial position is actually going to show all those column totals in the actual financial position. Right, then we've got the statement of changes in equity, so this is looking at capital and drawings accounts. Okay, any account that's similar to capital drawings will go here. And then obviously profit is what the owner or owners are going to take away at the end of every year. Okay, so now you've drawn that up. You know the answer must comply with IFRS. You know there's going to be notes that could be asked for but weren't asked for here. They said it wasn't required. Okay, notes to the financial statements and comparatives not required. They want you to round off to the nearest rand, and they want you to show all calculations. And that's important. You can't not show a calculation if they're asking you to show the calculation, because chances are you're probably going to get marks for it. So you rather show it somewhere here on your working. So I would either on a separate page put the heading workings, and then I would do all my workings there and then reference it in my solution, my answer.
Yeah.
Okay, so now we need to go and get our easy marks.
Okay.
Okay, what do? We read the scenario, we go down the list of balances, and we identify what things are. So question 1, MC Animal Clinic is a partnership with Mr. Dorda and Dr. Quenzenjani as partners. The information below pertains to the business activities of the partnership for the year ended 29 Feb. Okay, we already knew that. We knew that the year end is 29 Feb. So that's important because I need to look at the balances. Are these balanced at the beginning or the end?
Shush. Stop it. Okay, sorry, yes?
Are these balances at the beginning or at the end?
These ones are at the end. Except a few.
Yeah, if it's year end, it's going to be 29 Feb. So that's important because you know that you're going to be adjusting for those movements during the year if you've been given additional information, which they have here. Right, question 2 was terms of the agreement, and then 3 was additional information relating to year-end adjustments. So you know there are adjustments, and you can see that they've given you a year-end there. Okay, now we need to go down the list. Okay, so I did pick up mistakes here in your answer that you sent to me to check. For example, something like a prepaid expense account. What type of account is it?
Accrued no, it's not income. It's a liability.
Okay, no, you get different accounts, okay, that adjust certain income and expenses, and they either create an asset or a liability. But remember, you get assets, liabilities, income, expenses, capital, and drawings. Okay, so first tell me, what is the definition of an asset?
An asset is a resource that will help with future, an obligation that will help with future resources.
Okay, no, obligation shouldn't be mentioned when you talk about an asset.
Obligation is a liability. So it's something that gives future benefit to the company.
So the asset is only going to be focusing on the word resource, something that gives us future benefit, that's it. Okay, so does a prepaid expense give you future benefits?
No.
Yes, it does. If you prepay an expense, do you get something in the future?
Yeah, okay, yes, you get insurance.
If I haven't paid, then that's an accrued expense. So if I haven't paid, does that create a resource?
Yes.
No, if I haven't paid, that creates an obligation to pay.
It becomes a liability.
Exactly. So a prepaid expense is an asset, an accrued expense is a liability.
Okay.
So those are those basic adjustments that you would have covered in FAC 1502. Right, and that's why the first week that we did theory was the most important, because we recapped all those basics from FAC 1502. It's impossible to do 1601 if you don't have the basics from 1502.
Yeah.
Right, and that's why it's so important to revise all of that, because it still comes up here. For example, no one ever asks you about the definition of an asset in 1601 because they covered that in 1502. Right, but if you don't know what the definition is of an asset, you're never going to be able to identify any of these accounts in the question.
Yeah.
Okay, so that was something that I saw, that you did make some mistakes. For example, you had prepaid expenses as a liability, and then I also saw you had an allowance for credit losses. Where's the allowance? Here's it.
Yeah.
Okay, you had the allowance as part of, I think it was income, or as part of your expenses in your income statement. That's incorrect. Yeah. Okay, an allowance is not an income or an expense. What is an allowance?
Asset. It's a negative asset.
Exactly, it's a negative asset, so it must be disclosed against the asset.
Yeah.
Right, so things like that, those are basics that you need to practice. And that gets better with more examples. So you need to do more exams, and you need to practice identifying what these things are. Okay, that's what we're going to do. So let's go down the list again, and now you need to think about the definitions. Right, so what is capital?
Capital's capital.
Exactly, but what is it? Where does it belong? Does it belong to the financial position, statement of changes in equity, or income statement?
Changes of equity.
Exactly, changes in equity. So capital for these two partners need to be disclosed in the actual statement of changes in equity, which is here. Okay, so let's shrink this and let's write down those balances. Okay, so what do I have here? Well, I have capital for M and for K. So let's put a heading for that. Capital M, capital K. Okay, these are balances at 29 Feb. So is that at the beginning or at the end?
End.
That's the end. So where is that going to go?
End.
Correct. So I'm going to write that figure here, balance at 29 Feb. M had 438, K had 325. That's what I'm starting with. But I might have to adjust those figures. I don't know yet, but at least I've got something. So if I don't finish the exam, hopefully I would have done enough, okay, to pass the question. Right, remember, time is very important. You can't spend more than 44 minutes on this question. If you do, you're not going to finish the paper.
Yeah.
Okay, so that's the first two balances. Current account, M and D. What is this?
It's capital, but you're going to have to close them off.
It's capital. No, you see, you don't close off current account. When do you close off current account to capital?
Is it when you sell it?
Exactly, when I have a liquidation. When
Oh,
I'm selling the business or getting rid of those accounts.
okay.
Is
Okay.
this business being liquidated?
No.
No, so why do you want to close capital or current to capital?
Sorry. Yeah.
Okay,
That's
so
it.
see, that's basics. That's theory relating to liquidation. So you had two different chapters in your study guide. You had chapter, I think it was 2, which was the disclosure, which is what we're doing here. And then you had 3, which was a change in ownership. And then you had 4, which was a liquidation. Okay, so obviously, we're either dealing with liquidation, change in ownership, or disclosure. So which is it here?
Disclosure.
Exactly, it's disclosure. Disclosure means disclose. So everything must be kept separate. No accounts must be closed off because you're not liquidating the business. Okay, so
Yeah.
M and K. There's M, there's K. M had a debit or credit balance.
Had a debit.
Good or bad?
Bad.
Bad. So you need to show a negative here. So negatives are in brackets. 11,700. K had a credit balance. Notice 1st of March tells you this is the opening balance. So you've got 8,380 there. Okay, next is drawings. What is it?
Drawings is drawings.
Exactly. Again, it's separate. You're not liquidating the partnership, so it stays as separate accounts. See, and that's why I wanted you to do these questions ahead of time, because then you actually realize things like that. Because you've done the question, and then in your question, you didn't show these accounts separately. You just wanted to close them all off, right?
Yeah.
Yeah, but that's not correct because this is disclosure, not liquidation. So disclosure means show everything. As and when things change, you need to show the adjustments.
Yeah.
Right, so M and K. Notice there's no date mentioned here in brackets, so this is, we can assume end of the year. So we would then put 22 here, and we would put 5,800 there under the drawings for the closing balances. But they might change, but we don't know. We haven't read the additional information yet. We're just getting easy marks. Okay, long-term loan. What is it?
Long-term loan is a non-current liability.
Yes. Okay, it's a long-term loan, so it's going to go under your liability section, the statement of financial position.
Yeah.
Long-term loan. In brackets, I show the amounts. How much is it? 850. Notice in brackets, they tell you 1st March, so it's opening balance. Okay, that's what you've got. Right, so this is probably going to change, and then we'll have an amount. But I've got a bracket to show the working. Trade debtors control, what is it?
It's debtors, so it's an asset.
Exactly. Do I disclose assets?
No.
Not in this question, so I don't need it. Land and buildings.
Land and buildings is an asset you don't need.
Asset that I don't need for this question. Equipment?
You don't need it to asset.
Correct. For this question, I don't need it. Accumulated depreciation?
Negative asset.
Don't need it for this question. Vehicles?
It's an asset.
Accumulated depreciation?
Negative asset.
Allowance for credit losses?
No.
Negative asset. It gets disclosed against what accounts?
Yeah.
This accounts.
Yeah.
Those two accounts go together, and you disclose the net amount in the statement of financial position.
Yeah.
Okay, but I don't need it for this question because that's a negative asset. Profit for the year, notice before adjustments. Do I need it?
No.
Yes, I do. Aren't I calculating the profit? Yes. They ask for a statement of financial position and a statement of profit and loss and a statement of changes in equity, right?
Yes.
Okay, so this is profit for the year before year-end adjustments. Right, so that means there's not going to be any sales and cost of sales if they've already given you profits. Alright, so you could actually update your solutions. Then I would just cross that out, and I would just change this to profit for the year before adjustments.
Okay, so there's not going to be any cost of sales or anything?
Yeah, there wouldn't be sales and cost of sales because they didn't give you that level of detail in this question. Yeah, obviously different questions ask a different level of detail.
Yeah.
The challenge is, do you know where to disclose all these figures? So this figure that I've just read is telling me that I've got a profit before adjustments. So that means I still need to adjust. So 346380 is the profit for the year before adjustments. Then I've got an allowance for settlement discount granted. What is that account?
Discount granted.
It's an allowance, so?
Yeah, it's allowance. Don't you have to decrease it from the profit for the year?
No, okay, it's an allowance, so again, it's another like negative asset type situation because remember, it relates to a discount that you're going to grant. Okay, so earlier we spoke about an allowance that you're going to grant for your credit losses. Why? That's a future expense that's going to arise. Here, you've got a future expense that's going to arise. Okay, discount granted. Discount granted, we know, is an expense because it gets taken off your asset.
Yeah.
Okay, so am I going to show this? Not for this question. Right, prepaid expenses. Do I need it?
It's expense. Yes.
No, it's not an expense. Prepaid expense is something different.
Yes, it's an asset.
It's an asset. Do I need assets?
No.
No. Okay, if I did, I would disclose this under the current assets.
Yeah.
Okay, and that's it. You've read the question. That's all you can take away from the information. Now you need to adjust, and you need to now look at the details in the actual question, because that's where you're going to get the majority of the marks. Is that right?
Yes. That is fine.
Okay, so number 1 or 2.1, partnership agreements. Mr. M and D share profits and losses in the ratio of 3:2. Is that important?
Yes, it is.
Yes, it is. That's the profit sharing ratio. Right, so if I'm looking at my solution, I'm definitely going to have to consider that when looking at the profit. Okay, so how much does M get? 3/5. How much does
2.
K get?
2/5.
2/5. Right, that's important. I just read it. That's all I needed for. It's just the profit sharing. Right, I don't calculate anything. I don't show anything because I don't have profit yet. Once I've got the profit, then I need to split the profits.
Yeah.
Okay, do I need 2.2? What is 2.2 focusing on?
I'm just looking. Interest is calculated at 5% per annum on the opening balance of the partner's current and capital. Yeah, you will need it.
Okay, so what do I do with this?
You have to work out the 5% of each partner on their capital and current amounts.
Correct. Who pays for this amount?
The partnership.
The partnership, exactly. Good. Okay, so in the statement of change equity, I actually need to look at this profit figure, and I need to copy that down. Okay, because I'm going to say less the interest on capital, right, partner's capital, because who pays for it? The partnership. And then I'll write down, and also the interest. Interest on current accounts. Okay, so that's something to consider in this question. Right, I need to now go back to my information and look at it. Okay, did I have capital at the beginning of the year? Did I?
Yes.
No, I didn't. There's no capital at the beginning of the year. From what we've read.
Oh, okay.
Okay, we've read the end of the year, which was that figure, right?
Ended. Sorry, yeah.
Okay, so we need to know, did the capital change during the year? Do you agree?
Yes.
Okay, so then you go look for information in the question. So do you see any point in the additional information that talks about capital that was contributed during the year?
Nothing was contributed during the year.
Where do you see that?
No, well, it doesn't state that anything was contributed.
Okay, yeah, so you need to scan everything. Right,
Yeah.
so 3.6 is looking at carrying amounts. 3.5, depreciation. 3.4, this was a selling of a vehicle.
That's all.
3.3 was land and buildings. 3.2 was commission. Okay. 3.1, long-term loan was granted and bears interest.
Yeah.
Do they mention anything about a change in capital during the year?
Nothing.
No. So you can safely assume that what you started with is what you ended with. Okay, there was no capital contribution. Would have been 0 for both during this financial year. Okay, because remember, capital would have come from last year.
Yeah.
Okay, so here we're looking at does the capital in terms of adjustment affect the current financial year? Well, the answer would be no if there wasn't any adjustment given.
Yeah.
Okay, so it's safe to say that that's the opening as well as the clothing. Right, so am I going to charge interest on this?
Yes.
Yes. How is interest on capital going to affect the partner's accounts?
It's going to increase it.
Correct. It's going to make them entitled to more, right?
Yeah.
Okay. So if they're entitled to more, what are we going to do? Debit or credit the account?
Debit.
Okay, we're going to debit the account because they're entitled to more.
Yeah.
Okay, so if I'm debiting the account, what am I going to do to the account?
You're going to increase it.
No, think about it. This is interest on capital. So the partner's account is what? A debit or a credit?
A debit.
No, the partner's account.
Oh, it's going to be a credit.
Yeah, the partner's account is a credit. So will the partner be entitled to more or less?
A more.
The partner will be entitled to less.
Oh, and the partnership is entitled to more.
The partnership. No, hold on a sec. Let's just restate that. So, okay, so we're looking at the contribution. So if they contribute, the partnership will be entitled to more.
Okay.
Because the partnership wouldn't be entitled to more because if the contribution comes from the owner is entitled to something.
Okay.
So in that case, the owner would be entitled to, if we were getting the actual, let's say capital, then they would increase their capital and they would decrease their entitlement in terms of what they're entitled to.
Okay.
So we're trying to look at the actual movement. So who pays for the interest on capital?
The partnership.
Yeah, the partnership would pay for the interest on capital. Right, so if they're paying for the interest on capital, is that going to come out of the profit?
No.
Yes, it will. Someone needs to pay for it.
Okay.
Okay, so if it comes out of the partnership, it's going to come out of your appropriation.
Okay.
Okay, so in the statement of changes in equity, you'll have an appropriation account, which is the sharing of profit and loss. Okay, so interest on capital is going to be subtracted from your appropriation account because the partnership is paying for it. Right, how much does M get? M gets his capital times 5%. That's how much he gets. And K would get that times 5%. Right, so it's 5% of M's capital at the beginning of the year and 5% of K's capital at the beginning of the year. And that would be what would be coming out of where? The profit, do you agree?
Yeah.
Yes, okay, that comes out of appropriation. So it'll be minus this, minus that, gives you a full negative, which would have come out of the profit. So there'll be less to distribute.
Yeah.
Okay, do I do the same thing for drawings? I mean, not drawings, current.
Yes.
Okay, because they said capital and current accounts follow this amount. Do you agree?
Yes.
Okay, so which partner is going to have to pay the partnership?
Which partner?
Which partner is in a bad position?
M.
Why?
Because he's got a negative.
Correct. So if there's a negative balance, does he pay the partnership or does he get paid by the partnership?
He pays the partnership.
Exactly. Yeah, he'd have to compensate for having drawn more over the life of the partnership until they chose to disclose this information.
Yeah.
Okay, so where are we going to put that? Debit or credit side?
It's going to be debit.
Of which account though?
Of capital.
Of bank.
Okay. Okay.
What are they getting? What is the business getting?
Profit.
Cash. Where is the cash coming from?
The partners.
The estate agent. The partnership.
Okay.
Okay, the partners are just individuals belonging to the partnership.
Yeah.
Okay, so we need to show that. Right, so to get our mark, interest on current accounts. Okay, this current account is bad, so it's going to be a negative. It's going to become a bigger negative, 0.5%. Okay, and then obviously this is going to be times 0.5%, which is positive. Do you agree?
Yeah.
See, and now the net effect is going to be what? The difference. Okay, for appropriation.
Yeah.
Right, so the one pays the partnership something, the one receives something from the partnership.
Yeah.
Okay. Next, dish information. Do I need 3.1?
3.1. I'll read now. Just hold on. The long-term loan, yeah, you are going to need that.
Why?
Okay, the long-term loan from the bank was granted on the 1st of December 2013 and bears interest at 12% per annum. The interest on this loan is capitalized annually. The loan is secured by a first mortgage over land and buildings and is repayable together with interest on the 1st of December 2016. Oh my word, it's pouring.
Yeah, it's
Okay.
on my side as well a bit, but
Yeah, it's literally pouring. They said there might be hail.
oh wow, sure. So you've got hail in your area. That's hectic, yeah.
Yeah, look.
Okay,
We have a bad
yeah, let's continue and let's hope that the connection stays with us.
Yeah,
it should be
hope so.
okay, but let's just see. Okay, all right. So if I've got a long-term loan, the long-term loan is going to be incurring interest. Where do you show interest?
Other expenses.
Correct. So you know you're going to have to put it there to get a mark for it. And then where else must you put it? They say the loan is capitalized.
If I want to be by non-current liabilities.
Yes, that's right. Okay, because they said here the long-term loan, interest on the loan is capitalized annually. So what does that mean? Well, that means the loan amount will increase every single year with the interest. Does that make sense?
Yes, it does.
Okay, and then they say the loan is secured and is repayable together with interest on 1st of December 2016. Is 1st December 2016 within the next financial year?
Yes.
Okay, so what does that make the loan? Long-term or short-term?
Long-term.
No, it makes it short-term now that we've read that line item.
Okay.
Okay, because what are we doing? We're disclosing information for 2016, right?
Yeah.
There's it. Okay, so is this loan long-term still? No,
No.
this loan is now short-term.
Short.
Right, so what you need to do to fix disclosure, you would minus 850 here, okay, and then you would show 850 there, because it's a correction in terms, or an adjustment rather, for the actual timing of the actual repayment of the loan.
So wait, you go to liabilities and you minus the 850, okay?
Yeah, you're fixing disclosure. You're showing this short term because it's payable in the next 12 months.
Okay, then it's going to be a... So why won't it be a short-term loan now?
It is
By
a
the
short term loan.
But then can't we name it a short-term loan, or must we still name it long-term?
No, I would still call it long-term loan because it was long-term. It's just being classified as short-term purely because the date has finally arrived to make payments.
Okay, that's what's confused me because I don't understand
it's just
that.
disclosure. Right, so you can't change the word long-term loan to short-term loan because it is short-term now because you know it's paid in 1st December 2016.
Yeah.
Okay, so if you really want to, you can change that. It shouldn't make a difference because it's still the loan though.
Okay, no, I just wanted to make sure, okay.
Okay, now what? We need to provide for the interest, right?
Yes.
Okay, so how much is the interest going to be? Well, how much did you owe? 850, right?
Yeah.
Okay, so how do I work out interest for a year?
Won't it be 12%? Okay, it's going to be 850,000 times 12% divided by 12.
Yeah, just times 12%, that's it, correct.
Yeah.
Okay, so 850 times 0.12 gives you 102. Okay, so is this going to be capitalized, yes or no?
Yes.
Yeah, so if it's capitalized, it's going to be added to the balance of the loan. Right, so plus 102.
Yeah.
Right, and then you've got your first amount. Okay, 102,000. What did I have there? 102,000. Yeah, that's right. Okay, and 850. Great. Right, are you happy with 3.1?
Yes. I'm just writing
we
everything.
still need to show this here as well. Profit for the year. Okay, we'll come back and do that calculation. Okay, actually, maybe let's do it now. Finance cost or profit for the year. Not profit. Interest. Interest on long-term loan. Or interest on loan, let's use that. It's now short-term. Okay, so interest on capital. Let's show those workings. Where was it? There's the capital, so it's going to be that amount. Okay, it's going to be taken out of the profit. Interest on current account. Okay, you're going to have obviously an amount that's given and an amount that's taken. Does that make sense?
Yeah.
Okay, so you had an amount that was given, that was this was the interest, right?
Yeah.
So
Won't it be
we're not looking at the interest, we're looking at the disclosure for the actual loan, so that would be right, yeah. So you're only going to pay it off when it's due, and it's only due end of this year, next year, 2018.
Yeah.
Okay, so am I going to show this year? Yes, I'm going to show this as what?
A long-term loan.
A short-term loan, because it's going to be paid.
Okay. Oh, this year. Okay.
Okay, but the interest is key. We need to show the interest. So I've shown interest there, that's fine, and I've shown interest there, that's also fine. Interest on current account. Ooh, I need to get that figure. Where's interest on current account? Interest on current account, there's it. It'll be that figure there. Okay, so I've shown the interest on current account, and I've shown the interest on capital. Must I still show the interest on loan? Yes, I must.
Yeah.
Okay, so negative the interest.
So let's...
Got that?
Yeah, I'm just writing it in.
Okay, what else do we have next?
Um, 3.2. Commission of 27,000 was paid to Dr. K for securing additional clients during the year. This amount was recorded as part of general expenses.
Do you want to eat that?
Yes.
What am I going to do with this?
So won't you, because it's recorded as general expenses, won't you minus it from the expenses and then put it into the statement of financial position and statement of changes in equity?
Okay, well, it would go into the statement of financial position through the statement of changes in equity, but you wouldn't have to show it on both. The one figure will pull through to the other figure. So, but you're right. Okay, so what is commission going to do to the profit?
It's going to increase it.
It's going to decrease it. It's paid to the partner.
Oh, it's paid in the amount. It's it's going to decrease. It's like a salary. So yeah.
Yeah. So the commission is 27,000. It's going to be paid to who? K.
Dr. K. Yeah.
Right. So negative. The commission is going to come out of your profit for the year. Right. Do you show the commission as other expenses? No, you don't, because it's a partnership. A partnership is a partnership. It's separate from the business. Okay. So there's the commission, 27,000. Where else am I going to put that? I'm going to put that in the statement of changes in equity. Where's my SOCI? There's my SOCI. Okay, so I'm going to write down commission, received or paid. Which one?
Paid.
Okay, so we've got commission paid and commission earned. Okay, so obviously we're looking at the commission here. That's paid, something that you have to pay over to SARS. Right, how much is the commission that's going to be paid? 27,000. Who gets the 27,000?
Dr. K.
Correct, Dr. K. So is that going to increase or decrease their current account?
It's going to increase his current account.
It's definitely going to increase their current account. They're going to be entitled to more. Got that?
Yes.
Okay, now what?
Okay. Then 3.3. Land and buildings consist of ERF 621 Leisure Bay Ladysmith with improvements thereon. The land was acquired on the 1st of July 2013 for R4 million, and the building was erected at a total cost of 450,000. Was completed on the 1st of Feb 2016. But that's already the total amount. It's 1,450,000. It states that in the land and buildings.
Correct. So what are we going to do with it?
Won't you put it? Won't you put as, no, it won't be profit, it won't be expense, it won't be a liability. Won't you put on the statement of changes in equity?
Why?
Because it's a land and buildings, and the thing is it won't be on the financial position as it's only dealing with liabilities and equity, and the other one is income and profit for the year.
Well, income and assets.
Yeah.
Yeah, so you're right. Okay, so the actual commission is going to be paid, and it's going to increase that partner's entitlement, but at the same time, the profit is going to have to pay for it. Do you agree?
Yes.
Here's the profit that's going to pay for it.
Yeah.
Okay, notice it was part of general expenses. Okay, so if you had general expenses here, what would you have to do? You'd have to take it out of general expenses.
Oh, you'd have to minus it.
Yes. Did they give you general expenses as a separate line item?
No.
No, they didn't. Okay, but I just want to show that. General expenses, brackets, okay, possible amount minus the commission. Brackets, this is additional. Okay, you don't have to show that, but it's possible.
Yeah.
Okay, I'm just showing that just as revision. Okay, what's next? Do I need this?
3.4. The accountant of the partnership neglected to record the sale of the vehicle with the cost price of 68,000. The vehicle was sold for 28,000 cash. On the
Hold on, you're missing 3.3.
No, we just did that one.
No, this was improvements to the building.
Yeah, but it stated that it was also erected, so the total was 1,450,000.
Okay, yeah, but this is improvements to the building. How much is the building worth now?
1,450,000.
Well, if you look at the statement at the end of the year, you can see it's 1.45 million. Okay,
yeah.
So the statement is correct. Well, the trial balance is correct. Okay, is this going to affect the books of the business?
No, it won't.
Why do you say not?
Because it's already stated as that amount, the full amount. It's already put in the.
Yeah, but when was it? When was it acquired?
It was before the financial year, the 1st of July 2013.
Correct. It's before the financial year. And when were the improvements done?
1st of Feb.
Yes. So am I going to show this?
No.
It's a revaluation surplus. It's an adjustment. It's like fair value adjustment. Okay, because an improvement means that you've built something to the actual land and buildings, right?
Yeah.
Okay, so you debit the land and buildings and credit in this case, you acquired the building. So see, the land was acquired on the 1st of July, and the building that was erected at a cost of 450 was completed on the 1st of Feb. Okay, so
yeah.
It would be debit the land and buildings and then credit the whatever it is.
Yeah.
Okay, so now the big question is this the revaluation? No.
No.
Okay, it's not a revaluation because it's seen as an improvement. Okay, so if it's an improvement, you actually physically improve the buildings, right? Rather than receive the benefit because the building is worth more now than it did before.
Yeah.
Okay, yeah. So you wouldn't have to show this, but if you did, okay, it wouldn't have been an improvement. It could have been a fair value adjustment, or even better, a revaluation surplus. Okay, reval surplus. And a revaluation surplus is actually equity that the partners would be entitled to. But yeah, it's not something that you have to provide for here. Okay, so yeah, so land and buildings isn't required in this particular question.
Yeah.
Next.
The accountant of the partnership neglected to record the sale of the vehicle with a cost price of 68,000. The vehicle was sold for 28,000 cash. On the 1st of December 2015, the accumulated depreciation of this vehicle amounted to 14,000 on the 1st of March.
Okay, so does any of that affect the statements that we need to present?
No, because it's dealing with assets.
Ooh, be careful though. What happened here?
There was accumulated depreciation because the partnership. So I might have to deal with the statement of changes in equity.
There's a sale here. No, nothing to do with the statement and changes in equity. There's a sale here. What do you do with an asset disposal? Do you remember?
No.
You work out if there's a profit or loss.
Okay.
And the profit or loss will be disclosed in the income statement, right?
Yes.
Okay, so this does require a working. Asset disposal. T accounts.
Yeah.
Okay, they said show all workings. I'm showing a working here for my asset disposal. Okay, what did the question say? Well, they said the vehicle cost 68. So where do you put cost in the asset disposal? On the debit or credit side?
Won't it be debit?
Yes. Okay, so the vehicle, which is the cost, will be on this side, and the amount was 68. Okay, what else did they give you? They said they sold it for 28 cash. So what happens to bank when you sell things for cash? Bank goes up. Okay, so we still need the accumulated depreciation here. Okay, but we know we're going to have bank here, asterisk the proceeds. Alright, how much did you get? 28.
Yeah.
Right, all we need to know is how old is this asset. So how old is the asset?
It is 20. It wasn't even a year old.
Well, when did you buy this? This was bought in the past, do you agree?
Yeah.
Okay, you've got accumulated depreciation for the beginning of the year, right?
Yes.
Okay, must I still provide for depreciation during the year?
Yes.
Yes, because that's the 1st of December. Okay, so this accumulated depreciation is going to be the 14,000 plus depreciation for part of the current year. Okay, so how do you work that out? Well, you need a rate. You can see in point number 3.5, vehicles is calculated using 20% per annum straight line method. Does that help a lot?
Yes.
Yes, it does. Okay, because now I can show depreciation, brackets, old asset sold, is going to equal, how much is the cost? 68 times, what is the rate of depreciation? 20%. How many months? Well, December till March. How many months is that? Well, December, January, well actually, not December to March, other way around, March to December. Okay, because December is when I sold the vehicle. Does that make sense?
Yes.
Okay, so it's March, December. What is March, December? How many months? Well, March, you would count March. So it'll be March, April, May, June, July, August, September, October, November. Do I count December?
No.
No, because it's 1st of December. So it's only 9 months. Make sense?
Yes, it does.
Okay, see, I'm showing all workings. I have to. Right, so 68,000 times 20% times 9 over 12 gives me 10,200. Am I going to show 10,200 in the books of the business?
Yes.
Of course I will, because did you use the asset for part of the year?
Yes, you did.
Yes, you did. So you have to show it. Great. Okay, so this is going to go here in the other expenses.
Yeah.
Okay, depreciation on the old asset sold must be disclosed here. Got that?
Yes.
Okay, so that's depreciation for the old asset sold. I still need to work out if there's a profit or loss. So go back to the question. Okay, so do I now know what the total is? Yes, I do. 14,000 plus 10,200 gives me that. Which side's bigger here, left or right?
Right. No, left.
Left is bigger. So you balance this account off.
You're right. I mean, left, sorry.
Minus that gives you a loss on sale.
Yeah.
Okay, there's a loss on sale because remember basics, debit the loss on sale, credit the asset disposal. Okay, when you sell assets at a loss, you need to incur an expense. Okay, and this expense is going to be disclosed as an expense. So there's a mark that you would show here, loss on sale of an asset or vehicles even. What's a vehicle? What's a vehicle? Hey, yeah. Open brackets. See working below. See, that's what I would reference, and then I would literally show that here. Show the 15,800 there. Make sense?
Yes, it does.
Okay. Right. So now have we finished 3.4? Let's go back and read it again. You sold a vehicle with cost. I've done that. Vehicle was sold for 28. I did that. And the accumulated depreciation. I did that. Fine. Okay. Next bit. 3.5. Do I need this?
3.5, depreciation must still be provided. Yes, you will.
Definitely. Okay, so buildings. I am depreciating the buildings. 5% per annum on the straight line method. Okay.
Yeah.
Let's go back to that building story. Where's the building story? Here's the building story. When did I buy the building? Or when was the building complete?
The 1st of Feb 2016.
Good. So 1st of Feb 2016 till year end. What is the year end?
Year end 29th of Feb.
So how many months did you have the building for?
1.
1 month, exactly. Okay, so depreciation for the building, open brackets, how much was the building? 450.
Yeah.
Times, what is the rate? 5% times 1 over 12. Makes sense?
Yes.
See, I'm showing all my workings. 450,000 times 5% times 1 over 12. Okay, gives you 1,875. That's the amount that you're going to record as a depreciation line item in the statement of comprehensive income. Okay, do I need to show equipment depreciation?
Yes.
Of course I do. Good. Equipment depreciation. Okay, equipment depreciation is going to have a working. The working is going to be on diminishing balance method. Right, a 10% diminishing balance method. So now you are going to have to go back to the question. Where is it? Here's it. And you're going to have to get this. The equipment. Okay, so equipment, 385,000 minus 90,000 gives you the carrying value. 385 minus 90,000, close brackets, times, what is the rate of depreciation?
It was 10% diminishing balance.
10% diminishing balance, correct. You just times by 10%. Okay, and there's your next bit that you have to disclose, equals that amount. Okay, 29,500 is the amount that is going to have to be refunded. Okay, potentially. Not refunded. That's the wrong word. Well, recorded in terms of the depreciation. So in other words, the use. Okay, it needs to be recorded. That's the word I was looking for. Recorded. Okay, makes sense.
Yes, it does.
Okay, 3.6. Carrying value of the property, plant, and equipment. Do I need this?
Yes.
Why?
Because you're dealing with equipment and I don't know.
No, you need to work out what's left over, right?
It's your ended. It's a final amount. Yeah.
It's the final amount. So basically, this is taking all the adjustments into consideration. Notice they said correctly calculated at.
Yeah.
Okay, where would you have put this? In which part? Which section? Which statement?
Type of changes in equity.
No,
in the
property, plant, and equipment. PP goes where? Assets and liabilities, right?
Okay, yeah.
So this will be statement of financial position. Okay, but did they want your assets?
No.
No, they didn't. Okay, so I'm not going to have to worry about that. Right, so all we have to do is do the profit sharing. Okay, so now we've done the question, we've gone through everything, we've taken what we can to build the answer. Okay, we need to go back and we need to fix all of this now. Okay, so let's first start with the profit and loss here. Okay, so we had the profit loss, no other income. Okay, we had lots of other expenses though.
Yeah.
Okay, so this is going to equal the sum of all of those amounts. Okay, so in terms of profit for the year before adjustments minus the adjustments gives you that figure. Okay, so that's the profit that you would have to share. Okay, I've obviously done that separately here because we're looking at the appropriation. Okay, so this profit for the year end adjustment, maybe just to put a specific note here, for the appropriation column.
Yeah.
Okay, so I'm still going to show the same things here. I'm still going to have interest, which I've already done, right? Did I show the interest? Interest expense. That would have gone to the profits. That's fine. Okay. Then you would have had general expenses. Depreciation we provided for. What else did we have here? The loss of the vehicle. Okay, so then this figure can actually change. That would be the profit for the year.
Yeah.
Okay, so is there a profit to share? Yes, there is.
Yes, there is.
Okay, so profit for the year. Okay, we're going to show profit for the year here under appropriation. It's going to be this amount. Okay, that comes from your statement of comprehensive income. Okay, we need to now know how do they split the profit for the year. Well, they split it in the ratio 3-5 and 2-5, right? Do you agree?
Yes, I do.
Okay, so you can even write profit sharing if you want to. Profit sharing. Okay, so let's check. How much do they still have left over? Well, I need to subtract all these other amounts. That's why I'm showing this. Sum of all of that gives me this amount. This is the amount that they can actually share, if that makes sense.
Yeah.
Okay, then I need to show the working. So this amount is going to be split between which partners? M and K, right?
Yes.
Okay, so M gets a share, K gets a share. M gets how much? Well, M gets 3/5 of that amount. So this amount times 3/5. Okay, and then this partner gets that amount times 2/5. Right, they said round off to the nearest rand. So this is going to be rounded off. And this is going to be rounded off to the nearest rand. So nearest rand would be 66. I think let's show the rounding. Okay, it's this direction. There's the one. There's the other. Got that?
Yes, I do.
Okay, what is that going to do to their entitlement?
It's going to increase it.
Exactly. So their capital accounts in the form of capital and current will go up. Right, so M gets that. K gets that. Right, there's the profit sharing. Makes sense?
Yes, it does.
Okay, so how much do they have at the end of the period? Sum up all of this. Gives me that. Sum up all of this. Gives me that. Again, nearest rand.
Yeah.
Right, so now we've wrapped up the statement of change in equity. The drawings. Oh, did they mention anything about drawings here? I don't think they did. Let's just double check that. Where was that bit about the... let's just check. Oh, it was at the beginning. Alright, they share profits and losses, that's fine. Opening and closing balances, that's fine. Okay, they didn't say anything about a payment. Okay, so that's fine. Right, so looking at the scenario here, okay, we've provided for the adjustments. Was there anything here that I needed to look at in the trial balance? We've looked at all of that. We've looked at that. Oh, bank overdraft. We didn't put that in. Bank overdraft is what type of account?
It's a non-current. It's a current liability.
Yes. Okay, I think I left that out when I... Yeah, we did. Okay, left it out there. Bank overdraft. How much was the bank overdraft? 25,300.
Yes.
Okay, but the question also had a few adjustments. Okay, because we saw things did affect banks. So I actually need to go back and just check, because we had the bank there. The trade creditors we need to put in. Did I put the trade creditors in? Yes, that's it. No, I didn't. I think we forgot to post when we were discussing the line items. I forgot to post them through. The trade creditors. Here we need to put creditors. can't leave creditors out. Creditors was 262350. Okay, land was fine, equipment was fine, all the other stuff was fine. Prepaid expenses was an asset, that's fine. Okay. Alright, so we've got that bit. Then I think we've covered everything. Let's just double check. The ratio we've used, the interest we've calculated. Let's go and have a look at that again. Okay, yeah, the interest I calculated, that's fine. We've looked at current and non-current. Okay, the interest on the loan we provided for, that was an expense. That went to our profit and loss calculation. That was fine, that's good. And it's capitalized, so it goes to the loan. Then the commission, we spoke about the commission. That was what was paid, that's fine. Then we had all the depreciation, which was fine. So yeah, we've covered the question. We've looked at everything. Okay, so now we can go back, and now we can tally up. Okay, so if I'm looking at the statement of changes in equity, we can assume drawings here would have been 0 and 0. Okay, so then drawings during the year would have been the amount that you had there.
Yeah.
Okay, in appropriation, we would have started with nothing, and then you would have ended with nothing. It would have been those two amounts added together, which is that figure there. But if I add up all those amounts, I'm going to get 0 there, sum 0. And that's what you want to see, because you're obviously apportioning the profit to the different owners.
Yeah.
Okay, so that wraps up that section. Let's go and draw up the equity part. Okay, so equity, I need headings. So I'll write down capital, I'll show a bracket. I'll write down current accounts, I'll show a bracket. I'll write down drawings, I'll show a bracket. Okay, appropriation, nothing because it goes to capital drawings. Right, so capital, if I add up those two amounts, I get 763.
Yeah.
Show the working. They did say show working, so I would show this. 438 plus 325. Show that. It's worthwhile because we don't know where they're going to be assigning marks, and then show the final answer there as well. Right, current account again, show the final marks. So 82628 plus 343725. Because you can see the one partner is a lot better than the other partner, hey?
Yeah.
Okay, not spending as much possibly. Okay. Right, and then drawing, same story here. Equals 22000 plus 5800 gives you that amount as the drawing. That will be negative. Make sense?
Yes, it does.
Okay, long-term loan is going to be 0 because it no longer exists, because it's now considered a short-term loan. Okay, the loan has been capitalized. It's going to go up by 952. Okay, creditors. Nothing happened to my creditors, so I'm going to keep that as is. 262350. Okay, the bank overdraft. I think there was something that affected bank here. Didn't they say something here? Yes, there's it. What does that say?
The vehicle was sold for 28,000 cash on the 1st of December 2015.
Is that during the year?
Yeah.
Yes. So would you have a cash flow?
Yes.
Yes. So what's going to happen to your bank account? Is it going to go up or down?
Gonna go up.
No, your bank account will go down because you're going to pay the...
Oh, the bank. Okay.
You're going to pay the... Okay, so you'll pay interest. This is actually... We didn't pay the loss. This was an amount that was sold for. So we would have received it. So you're right. It should have gone up. Sorry, I said down. Okay, so you're right. It should have gone up. Okay, so... Okay, I know why I said it went down. Because if your bank account's going to go up, what's going to happen to your bank overdraft?
Gonna go up.
It's going to go down.
Okay.
Because think about it. A bank overdraft will decrease if money's coming into the account.
Yeah.
Does that make sense?
Yes, it does.
Okay, and how much did you receive? 28,000. Okay. Right, I think there wasn't there another cash somewhere here. Where was it? Bank overdraft. Bank overdraft. No cash, eh? No cash. Yeah, that wasn't cash. The only cash was... Oh, that was capitalized. That wasn't cash. Was there cash? Okay, general expenses. Oh, was paid. There we go. That's what I'm looking at. See, I thought I remembered something that was paid.
Yeah.
Okay, so if you're paying a partner a commission, is bank going to be affected?
Yes.
Yes, bank will be affected. So that's going to be recorded in the actual books of the business. What's going to happen to the liability if you're paying? Is the liability going to go up or down?
Up.
Yeah, the liability is going to go up because you've paid for the commission. Right, so I paid 27,000. That's going to be added to this plus 27,000. That's going to give me a final figure for my bank overdraft of 24,300. Right, then we just get a sum up. So obviously there's no non-current, but there is current. Sum up all of that. That's going to give me that total there. Okay, so my liabilities will be my current plus my non-current. Okay, it gives you that answer. And then my total equity and liabilities, this would equal the sum of all of that. Equity here plus liabilities gives you total equity and liabilities.
Yeah.
Okay, so this plus that. Oh, come on. This plus that. And that's the total equity and liabilities. That's the total that you would have paid. Okay.
Yeah.
Right, so quite a bit of disclosure here. You needed to think about the adjustments and how those adjustments would have affected the disclosure in this question. Okay, remember to show workings for everything. Even for a simple depreciation calculation, still do the working.
Yeah.